All right, welcome back. 18 point up for SGX, but that's got nothing to do with today's event. In fact, from a market standpoint, today's what on account will be more like a no event. So why is SGX up? That's largely because of global cues and the fact that last Friday, US markets also had a strong close. Arvind Sanger, managing partner with the Geosphere Capital Management, joins us live from New York. We will connect with him in next 30 seconds, but before that, let me just recap the global setup because ultimately that is the big variable, that is the big driver. Thankfully for us, globally things are looking calm and stable. Emerging market currency storm has come and gone, and one would argue that global flows which were threatening to completely move against us, they also have stabilized. So globally, few good things have happened, and that on the margin is decent news. Mitesh, till the expiry, to your mind, what could be the big broad Nifty range?
See, I think, as you've been saying, that the direction of the market in the short term remains on the downside. So I think we have talked about 5980, 5970 as critical levels. If we break those levels before this expiry, then I think the expiry could be around the 5850 mark. Else, I think between 6000 to about 6100, which is the range which has been going on, will hold on for the next couple of weeks.
Ashwini, it was oil and gas and IT which held the market up on Friday. What's the sense that you're getting? Will we see continued strength in IT as a pack?
See, the S&P is only 10 points away from its all-time highs, and till the US continues to move higher, IT seems to be regaining its strength. So at any point in time when the markets are moving up, this sector is likely to move up more than the market. And similarly, when on the downside, it will move less than the market. But the key issue here is the bank Nifty, how much it pulls back and whether it's able to get together a substantial rally. If that's not the case, then basically the going up of IT will be counterbalanced by the bank Nifty. And finally, if we start getting a fresh decline on bank Nifty, chances are the Nifty is more likely to follow the bank Nifty than the CNX IT.
So Ashwini, for a trader, what is a good trade? Long IT, short bank, or only long IT, no short bank?
Well, long IT and short bank remains a reasonable trade because yes, banks will go up, but not as much as IT will. So that spread you will always get. And on the downside, again, banks will go down, so will IT, but IT will not go down as much as the banks. So there is clear, disparity between those two moves. So that trade keeps you reasonably safe.
Well, the two sectors which are going to be in focus, and let's really pick them up one by one. Of course, there is talk of duty on gold being slashed. So yes, the jewelry stocks are going to be in focus. So watch out for what Titan, PC Jewelers, Gitanjali Gems, some of the actively traded participants actually do. And of course, autos, they too are the ones which are in focus, considering again, there is talk that perhaps there will be some SOPs which are going to be announced for the auto sector. But we will discuss case by case individual stocks in just minutes from now. But Arvind Sanger, managing partner at Geosphere Capital, joins us now on the show. Arvind, hi, morning. Is my voice reaching you firstly?
Hi. Yes, I can hear you clearly.
Okay, great. Arvind, what's the sense that you're getting? Will today turn out to be a big event for the market?
I think, frankly, as far as I'm aware, nobody cares. Because, this is obviously now a lame duck budget of a government which is kind of in its lame duck phase, given that there's an election, less than 3 months away. So I don't think, and I think Mr. Chidambaram knows enough to not do anything, too populist in the head of the elections, even if some in his party would like to. So it'll probably be a pretty bare bones budget. And if there are any specific things that, I think you were alluding to, either on gold or autos or something that might be marginally have an effect on some of these stocks, but I don't think that's the real big driver of the market right now.
Arvind, let's say if the fiscal deficit number for FY14 is at 4.4 or 4.5, will that cheer the market? Because the consensus view is that the fiscal deficit for FY14 could be 4.8. If 4.8, which is the consensus number, and if the real number moves to 4.5, will that cheer the market?
Well, let's be clear, the fiscal year is not over yet. So whatever number that the finance minister puts will not be the final number. The final number will not know for a few months. So the reality is that, yes, some of the recent receipts from the telecom auctions look like they're going to exceed expectations. So there might be one or two things. I think it's quite likely the finance minister would like to point to a number lower than 4.8. What that number he points to may be marginally interesting, but how much of that is really structural versus one-off is what matters, because what we care about is what's going to happen going forward. So other than maybe a modest positive surprise rally, which will be overwhelmed by all the other factors very soon, if not today, then in the next couple of days, I don't think it's going to move the needle in a sustained way, because I think the real issue is the government has already done some good on getting the fiscal deficit on a sustained downslide from the standpoint of fuel price subsidies getting reduced gradually. So that that's good news that exists from before. What they get from disinvestment, divestment targets, what it actually turns out to be, is still a guesstimate between now and end of March. And other structural factors on the revenue side, I don't think are looking good. If anything, the numbers from this quarter, from the earnings season, have been frankly quite disappointing for Indian companies. So the revenue side is not looking good. So I'm not sure that a number by itself is going to be particularly heartwarming for the market to cause any sustained rally.
Arvind, what about the market per se? Because it's gotten pretty tricky in the last couple of trading sessions. 6,100 seems to be, such a tough resistance mark that the market cannot really cross this hump, and just very range-bound, lackluster sort of moves is what we've seen. What's the sense that you're getting? What could be the next big trigger which is going to make the, market take a leap either in one direction or the other?
Well, let's put it in perspective. If you look over the last 3 months, last 6 months, India's market has been one of the best performing amongst major emerging markets. You look at what's going on in Brazil, you look at what's going on in Russia, you look at what's going on in China, Indonesia, other markets. The currency particularly has been quite strong, and the market itself has held up well. So I would say that the Indian market is suffering from the same global concerns about Fed taper and at least some of the liquidity starting to constrain, and that's been a factor. And then on the Indian front, I think the earnings were quite disappointing. And obviously, we're building in the hope rally on a clear government emerging. But there's starting to be a little more noise coming out of the whole Delhi government and AAP situation, which does increase the risk of not having a clear government. So I think the market's probably going to be between the global factors and the local factors, probably more range bound than I would have hoped. I was frankly surprised by how poor the earnings this quarter were. So I think these factors are not about to lift anytime soon, and therefore, I think the market will take some global cues if the global markets get a little bit more confidence back. That'll help. And on the local front, I think we will be watching closely how the election tea leaves are reading. But I think at this point, it's going to get harder and harder to make an exact call. Although it does look like BJP still has strong momentum, so we can only hope that there is a clear government at the end of the day.
Okay, Arvind, we're going to talk much more about politics in just seconds from now, but I'm going to get also on board Ramesh Damani, member BSC. Ramesh, hi, morning. What is it that you're expecting from Mr. Chidambaram today? A pitch for upcoming elections or just a report card of the year gone by?
Good morning, Aisha. Nice to be on your show. Aisha, I'm fairly optimistic. I think there will not be any headline splash announcements in the interim vote on budget. I think the finance minister has done an excellent job over the last year against this global volatility we've seen in emerging markets. The rupee has stabilized, the Indian market has rebounded, the current account deficit, the fiscal GDP, all are coming under control. So I think he deserves a lot of credit, and he's going to steer the course. I think he's one of the few people in the UPA who's kind of figured out the importance of good economics leading to good politics. So I'm fairly hopeful going into this vote that, in fact, in my opinion, this is the calm before the storm. That the market that you pointed out earlier in your commentary has been so sluggish for the last few months or so will now start outperforming as the market starts focusing on the imminent election in the next 90 to 120 days. So I think the portents are good. All the economic indicators are heading in the right direction. So I'm fairly optimistic, Aisha, this morning.
Okay, gentlemen, stay with us. Let's take a quick break, but we've got a power pack lined up. Vimal Jalan, Subir Gokhan, Chetan Aiyar, Jangir Aziz, KK Misri, Swaminathan Aiyar, Punita Kumar Sinha, Arnav Das, CJ Ram, and Mukesh Bhutani. All of them will be joining us at different points to walk us through the Chidambaram's maiden vote on account.